Hey everyone, this is Josh here with Invest with Matt, and today we are going to finally talk about TSSI. This is TSS Inc. This is part 2 of the Perfect Storm series that I've started, the 3-part series, which we started with Hood, moving on to TSSI, and then finally we will finish up with Ethereum. These are probably going to be my 3 biggest trades of the year, at least size-wise. We covered Hood last time in pretty good detail. It took about an hour. This should be a little bit shorter just because I'm not or have not been as involved with TSSI as long as I have with Robinhood. And it's 2 years versus 6 months, so I have a lot more background and data for Hood to speak on. But today we're going to cover TSSI. Um, we're going to start right now and kind of covering the general thesis and then get into why this is a perfect storm setup. And then we'll look at the fundamentals similar to what we did with Robinhood. I think this is a stock unlike Robinhood that very few people know about. I've been talking about it since it was $6 or $7. I've traded in and out a few times. I have a long-term position that I plan to keep holding on to. But to lead things off here, let's just take a look at the chart. And this thing is a beast. It really is. Like I don't I don't understand how no one's really been. It's kind of like SMCI. Honestly, if we look at it overlaid with SMCI, the setup is very similar, and they're two very similar companies. I kind of think of this as like a baby SMCI in the earlier stages of its growth trajectory. So this is TSSI. Um, you know, this chart tells it all, but we'll get down into kind of why the chart looks this way and where I think it's going to go. So, right now as we speak, there are really 4 forces that are converging in the AI space that create this great investment opportunity, at least in my opinion. Most people are looking at NVIDIA. A lot of folks are really at AMD right now. NVIDIA is near all-time highs. AMD is recovering. Of course, you have SMCI that we've already talked about that's more or less kind of played out on its narrative. And these stocks all have really staggering valuations. I mean, we're talking about multi-trillion-dollar companies, tens of billion dollars. For the smallest of those 3 being SMCI, is still a very large company compared to this one. And you'll see that in the charts that I have. Right now, TSSI is only a $540 million market cap. It is tiny. I mean, it's basically it's not even really a small cap yet. It's so little. It's positioned really well. It's what part of it we'll talk about makes this a perfect storm for them, because they're at the bottleneck of the AI revolution, and Wall Street really hasn't discovered them yet. No one's covering it. Um, you don't see it pop on forums. You don't see it on Reddit. You don't see people talking about it on StockTwits. You don't see it on Twitter anywhere. Like when I search for this name, like my name is one of the only ones that comes up with people talking about this. I've been talking about it for the better part of 6 months. I know I started at the end of last year's when I took my first position in it. And I traded out of that earlier this year, then traded back into it. And now I kind of have a long-term position after this last earnings report that I plan to really hold for a very long time, at least until the AI narrative plays out. So let's meet TSSI, the ticker. You have it here on the string or on the screen. This company posted a 523% revenue growth. It sits at the center of the AI deployment that's happening right now. Today, I'm going to show you why it represents the perfect storm opportunity based on the AI infrastructure that needs to be built out. All right, so let's move it over and see why this is a perfect storm opportunity. All right, so here we're going to just cover the 4 critical parameters, or at least the 4 main themes for them right now that are all kind of converging at once. Just in the past few months, we've seen an unprecedented acceleration in AI infrastructure. You see it on the mega caps, earnings reports for their capex spends. You see the data centers that are being built out to support companies like OpenAI. And that's only going to continue to grow as the consumption of AI grows, people get thirstier for it, as businesses continue to deploy it in their organizations in different facets and ways. These data centers are going to need to be there to support this growth. And this is kind of where TSSI sits right now. OpenAI's GPT-4 turbo rollout, that's requiring new data center, a massive new data center with very large capacity. And that's just OpenAI. Microsoft's got 50 billion in AI infrastructure committed as of their last earnings. Meta Reality Labs is scaling up for AI powered worlds. Gemini, the deployment there is across their entire product suite. And the same thing, I think Apple will probably end up getting more involved at some point, and they're going to have to. But that's just what we're seeing. Those are just a few of the things. I'm not even talking about XAI. I'm not even talking about Tesla and the robots. There's just so many areas where infrastructure is going to play a key role into AI. And I think this is very different than the infrastructure that was being built for the internet. Like there are some similarities, but these are profitable companies that are building this. And I think it's going to continue to scale at a rate, at least from what we're seeing right now, out into the next few years. And these infrastructure companies are going to continue to play a very critical role in that build out. So, this really isn't just hype. This is real demand for infrastructure. 35 billion today to an estimated 150 billion by 2030. The keys, it's not just the servers. AI workloads require specialized integration, liquid cooling. They require 5 times more power than traditional servers. This is why we're seeing, the nuclear side of things kind of blow up too, like Oklo and some of the other, SMR stocks, because there's going to need to be a lot of energy infrastructure too to support the future of AI. Yeah, that's the first thing. That's the market timing. You're looking at the AI market CAGR. It's 45% right now. Enterprise adoption is 80% and growing. That's only going to continue to go that way. The second factor here is, we're finally entering into, let's talk about the remote. They specialize in AI integration servers, or just AI integration in general, but into servers. They have an exclusive partnership with Dell, which I've talked about before. It creates a pretty defensible position, at least into 2027. They have a contract that runs into 2027. There's less than 10 competitors that are on their level. SMCI would be one of them, and they're much larger. But it's just a small space. Well, at least competition wise. There's supply bottleneck too. Right now, it isn't just chips, it's integration. You can't just order AI servers on Amazon. These systems are very specialized. You need somebody like TSSI to come in to test, to integrate, to deploy. There just aren't that many people. Like I said, there's fewer than 10 companies that are in the world that are qualified to do this. And America, is really blowing up the expansion of AI, but I think other countries will inevitably follow, and they'll also need to support to ramp up, however they plan to integrate AI into their worlds. And here's what most people miss. They're in a very unique position, not just because of their partnership with Dell, but their Georgetown facility, which they are scaling up. TSSI has positioned themselves, perfectly to meet this need. They have an exclusive partnership, which we already talked about. But on top of that, and in support of that, they expanded to 213,000 square feet facility, which is just for AI integration. They've already are executing at 523% revenue growth over last year over year. And the previous quarter was really high too. They've had crazy revenue numbers. Their net margin went from 3 to 4.2%. I think that'll continue to go up with their expansion. And as they scale, these benefits, they'll just keep showing themselves. The other thing to think about is just the valuation. Despite the run up, which you saw on this chart, we can flip back to real quick. It's gone from like $6 to $23 over the past few months. And even prior to that, on the first run up, it went from penny land to almost $17 before it broke down, where I think people just weren't aware of whether they would be able to sustain the growth they saw through this period. And then when they showed that they could, which was pretty much the last quarter's earnings report, and their guidance, and just the general, I don't know how to describe it. The vibe around AI is really good right now. This thing really took off, and now it's sitting more or less at a new all-time high. It did get as high as a little over 24 today, but it's sitting at 23.77 right now. It's actually sitting at 24.16 in after hours. So as we're talking, it is sitting at all-time high right now, which is pretty crazy. But those are the four main factors. Their timing was great for the industry that they chose to be in. There is really very little competition in the infrastructure space right now. They're kind of at a financial inflection point as of last quarter, really the last couple of quarters. But last one was the one that I think started to like really clue people into what was going on. And then their growth, their current P is 98, which is high. But if you're growing 500 to 1,000% every quarter, it's not crazy. We saw SMCI get up to nosebleed levels at one point, and it's come back down, but their growth really slowed. And right now, I think TSSI is really in the early phases of their growth stage. Their market cap, like I said, is only 154 or 140 million dollars. God, I can't talk. $540 million right now. All right, let's move on. So now that we've kind of talked about why this is a perfect storm stock and the setup just from a macro perspective and from a vibes perspective, let's look at the actual financial explosion here for TSSI. I mean, this performance is staggering. The trajectory here, I mean, you can just see from 83% or 85% growth in 2023, 172% in 2024, and estimated right now of around 250% growth year over year for 2025. We're talking about a company that went from 29 million in revenue in 2022 to an estimated 519 million in 2025, and that's an 18x revenue growth over a 3-year period. But there's what's even more impressive to me is their scaling profitability. We can take a look at the net income. Their net income pretty much went from 0 to 16 million, in 2025 is what we're estimating, which I think it might end up being a little bit higher. I was trying to be conservative with this, in the numbers, but you can see that their margins will start to improve as well as they gain operational leverage within their business. Q1 2025 alone had 99 million in revenue and 3 million in net income. 0.12 was their EPS. So this isn't, a story stock. It's not just the AI narrative and perfect storm situation and where they sit in the infrastructure bottleneck. This is a company that's generating real cash flows. Like they've got real revenue right now and real customer demand. The backlog for them is very large, and it's only growing, which just means that they have future work already built in that they can count on. It's not going anywhere, and they're not sitting still either. I'm basing these growth projections on them continuing to up their capacity and expand. And I think as they generate revenue, they'll take and put this money back into their business, and they'll continue to grow and scale. They just tripled their capacity in Georgetown, which is in Texas, which coincidentally is where one of the largest AI programs and data centers that's ever been built is going to be built. So that could play into just from a logistical and location standpoint, could play into why they could win contracts out there to help deploy in this new facility that's going to be built out in Texas. So you're not just hoping for growth here. It's already there, and they're preparing for an avalanche really of demand that's coming their way. So let me explain why TSSI business is so critical. When Microsoft announces $50 billion in AI infrastructure spend, or SoftBank, says they're going to spend 200 billion, or OpenAI says they're going to spend 100 billion, or Meta scales up, something like Reality Labs, or any of these megas, or really it doesn't even have to be mega caps. Anyone investing in AI infrastructure. Um, when every bank wants to deploy AI, they all face the same issue, and that issue I'm going to pull up here just as a visualization. Let's see if I can find it. All right. It's AI infrastructure. And this isn't traditional IT. These systems require liquid cooling, 5 times more power than a normal server. It's got to be very precisely integrated and tested. It's got to be reliable 24/7. There's zero tolerance for downtime in AI, and that will become increasingly obvious and more important as the different types of AI that we roll out become more critical to daily life. We're not going to be able to accept that. So the people building uh, these server farms, that are building the infrastructure the AI is going to sit on top of, they're going to have to be really good at what they do. I mean, you just look at the comparison here from a traditional server to an AI, the AI infrastructure. The time it takes to build these out is also several times longer, and it's very specialized. So I think that's part of the reason why they, among their peers that do this type of work, are unique. And speaking of unique, something else that's very unique for them is their partnership with Dell. This is kind of as an investor, this is kind of like a secret weapon. They're Dell's exclusive integration partner for AI deployments. So anything AI related that needs to be deployed that's going through Dell, that somebody's using Dell for, they're going to use TSSI to help deploy that. Their largest enterprise customers, you got to think Fortune 100 companies, right? All of these are going to need AI infrastructure, and Dell sends in TSSI to do that. And this is just kind of a breakdown. They asked Dell, hey, can you design and sell us some AI solutions? And they're like, sure, we'll send out TSSI. I'm honestly surprised, like, why haven't they bought this company yet? They have this exclusive partnership where, TSSI, Dell's kind of just a middleman that's bringing them in to help, these large customers that they have. I really don't understand why they haven't bought them out and just brought them into the fold. It might not even be worth it. Their relationship might be beneficial to the point where it just doesn't make sense. But they don't have to compete for deals. They're just being fed Dell's pipeline right now, and they're exclusive. They have till 2027. Dell's going to use them. They're going to get a portion of whoever Dell sends out, that's in their portfolio. And it's not exclusive to TSSI though. TSSI could, if they wanted to, or if they get new customers, it doesn't have to be just Dell on their end. Their base that they're serving, it's financial services, major banks, insurance companies, fintech, Robinhood. They're not one of their customers, but just for example, healthcare and life sciences. So you're looking at hospitals, pharma companies, medical device manufacturers, or probably just any pharma manufacturing. Manufacturing, retail, automotive AI, retailers deploying recommendation engines. That could be online, it could be on Instagram, whatever. Supply chain optimization platforms, probably things like shipping, logistics. All of this could be AI driven, and it all feeds down to TSSI because all of these will need the infrastructure to support them. Why it's a powerful partnership? Because these customers that they're getting are pre-qualified through Dell. They're very high value, complex deployments that as being asked of them. So they can charge a pretty good premium for the build out. Less competition for deals. Again, they have that backstop through Dell, and it gives them a very predictable pipeline of revenue. And you can see that on their earnings reports. Like whatever they guide, like they're pretty much spot on for hitting that. 90% of the revenue comes from Dell. Like that is a risk, but it's one we don't really have to worry about for a couple of years. So as an investor right now, I don't really care what happens until 2027. So that has a long term, and then they just signed this agreement in December. So there's a couple of years of runway left on that partnership that they have. And the market cap, this is going to be a $150 billion market by 2023. There are fewer than 10 companies, as we said, that can handle this kind of scaling for AI enterprise. And they've positioned themselves through Dell as a premium player in the space. And, we can take a look at integration versus, manufacturing here real quick, and why the integration beats server manufacturing model. So the model for server manufacturing is what Supermicro currently has. Integration services is more of a TSSI Inc. model. There's no manufacturing, they're not a manufacturing commodity of servers like some companies. They're providing just a very highly specialized integration process. It's sticky, the margins are pretty good, and it's really hard to replace once they're deployed. Like, you can't just bring in somebody else to do this same thing the same way that they were doing it. Like, once you're using them, you're kind of stuck with them. And they do, they integrate complete systems. They have really good expertise. Dell has really talked them up. Several other companies that have used them have really talked them up. We already talked about their exclusive partnerships. We already talked about how they're scaling and expanding. They don't have to really compete on price like SMCI does. Now, SMCI does get to sell to everyone, including competitors. As you've seen, their margins have compressed over time, while TSSI, at least in the near term, their margins will be expanding. And I think that's pretty important distinction between the two, honestly. All right. So let's talk about next, let's compare their valuation, which is really high, to the opportunity that they have. As I said before, it reminds me a lot of SMCI, like in the early days, before they really blew up. They went from $30 to over $1,000 of their peak. That was around a 3,000% return, because they dominated this, this server space. They were really one of the first ones to be out there deploying, but they have had their share of issues. They had the accounting issues. They got kicked out of the NASDAQ 100, maybe. They're still in the S&P, so they didn't get kicked out of that. They have a commoditized manufacturing business, which is less than ideal for margins. They have intense competition from hyperscalers, whereas TSSI, they've been pretty conservative with accounting practices. Honestly, at least from paying attention in the last few quarters, when they guide, they typically, like, they're sandbagging a little bit. I think they sandbagged even, for this Q2 coming up. I think they're going to do a lot better than they hinted at. So their accounting practices have been very conservative thus far, from what I can tell. Again, their integration services, so they won't have that compression, at least not to the degree as a commodity manufacturing like SMCI does. And they have, an exclusive partnership versus just, competing with customers in the SMCI case. And you can look at the market cap valuation. Like, this is the crazy thing to me. Like, yes, Supermicro is doing way more in revenue, but TSSI is very young. So, like, if you're looking for a double, is it more likely that SMCI with a 75 billion market cap is going to double, or TSSI with a $540 million market cap? And the PE ratio, I would basically ignore that at this point for TSSI. Like I said, last quarter over quarter was 523%. A couple of quarters ago, I think they were over 1,000% quarter over quarter. Their year over year numbers, at least until Q3 or Q4 this year, are going to look crazy. So Q2 is going to look stupid. They really just focus on integration. They're not manufacturing anything. And if this were to return, I don't think it's going to return 3,000% from here. It's already up like a couple of thousand%, I think, because it was trading at pennies this time a few years ago. So that's not really something I'm looking for. But the market capitalization in general, if they can continue to scale and take more market share from SMCI and other competitors, I'd see it at least 3 or 5xing from a $540 million market cap. I mean, I don't think it would be unreasonable for this to be around 2 to 3 billion market cap. I think by 2027 they're already going to be generating over $1 billion a year in revenue. So I could see their market cap being several times higher to that, and I think it could be easily justified. As long as macro is holding up and the market's doing well and AI hasn't slowed down, I think for all intents and purposes, I expect that to happen. There's just such a difference here between these two as far as valuation right now. And I think they'll continue to grow into this at least over the next couple of years. All right, so let's talk about financial projections and scenarios for them. I already showed you my charts earlier for net income and revenue going forward in 2027. And I think they are probably at least grow 50% year over year on revenue. And I think net income is probably going to follow a similar path to where their price might skyrocket, but I think for a while at least they'll be able to justify it because revenues will keep expanding along with it. So right now they're trading around $24. I think, let's see where they're at right this second. Yeah, 24.16 is what they're currently trading at tonight. I think conservatively over the next year, 35 is easily achievable by this time next year. I had written an article when it was like $8 on why they would get to $30 by the end of the year, and I think they're still on track for that easily to get there. And I think it'll probably be choppy. I mean, it could go to 30 next week and then pull back and then end up still there at the end of the year. But that's only 1.6x return. I think this can do much more than that. I think the moderate chance is $55, which would be a 2.5x return over the next year and a half to 2 years. And then my bull case, depending on macro and depending on how AI rolls out, how that rollout continues, this is more where I'm leaning right now. I'm super bullish on the name and the space, as I think anyone should be right now and going forward. At $85, that's a 4x return. That's more of what I'm expecting, even from here 2 years from now. So if you plan on buying this and holding till 2027, I could see this easily being $85. That's 75% revenue growth. I said I thought easily they could achieve 50% revenue growth on a consistent basis. But if they scale, like I think they will, and we'll really start to see the benefits of that scaling, because their Georgetown facility just came online this quarter. We'll really start to see that in Q2, Q3, and probably more so in Q3, Q4 of this year. You'll have a better idea of what they can do. And at $85, if they continue on that growth rate, the P multiple would only be 40. And if they're still growing anywhere over 30, 40% for revenue at that point, then that's almost really a steal, in my opinion. And that would be on a level, that's once they have like SMCI type notoriety and recognition. I can't talk again, from the markets. And market just really, like I said earlier, there's nobody covering this. There's nobody really talking about this. You don't hear people on CNBC, Ian and Hahn over TSSI. And they are tiny, they're just now really ramping up into their S curve. And it's a similar thing to that, to what I was saying about Hood when it was trading at $17, $20. It was to that point where it had reached an inflection and you could kind of make the trade with a little more, you didn't catch the absolute bottom kind of thing, but you knew at that point, like, it was going to be worth a hold for a while. And I think this is where TSSI is right now. I think that once their Georgetown facility, rolls out for the first quarter this time, this Q2, we'll start to see some really big numbers from them. I think their scaling benefits will start to emerge. I think their annual guidance will get more aggressive towards the end of the year. And I think if not this year, then early next year, somebody's gonna pick them up and start covering them. And I think once that happens, that you know it could really start to take off if it doesn't before then. So just in the conservative scenario I'm showing here, that would only be 695 million in revenue and 23 million in net income. In 2027, that would be 869 and 36 million in net income. But really more what I'm looking at is like that bull scenario where they're over $1 billion in 2027 in revenue, and they're 50-60 million dollars at least in net income. And it just depends on how far their margins can really expand. But I would expect there to be, at least $1 billion in that year. And EPS, from growing to what it would be right now annualized would be 0.48 to about $1.63 in 2027. That's over 200% EPS growth. So that would be 100% every year for the next couple of years. That easily justifies those types of price targets, up in the 70s and 80s. One of the key drivers will be operating leverage. As they grow revenue, net margins, I think, will expand from 3% today to 4, 5, 6%, maybe even higher. It's kind of what happens when you have a scalable business model. I think, and it's in a high demand market, I think they could easily double margins from where they are today. So just for the sake of, I'll play devil's advocate here. We can talk about the risk. I already mentioned Dell. Having a single unique partner like that is kind of a double-edged sword. You had a really good relationship, and as long as the relationship is good, and as long as the contract is set up in a way that benefits them, I'm not that concerned. But they are really concentrated. I would like for them to get some other larger customers. Although with their backlog and what they're already supporting for Dell, I don't know that they really take on any more customers. I think they might be at full capacity just with Dell. Do they need to? I don't know. Could they expand their facilities again and double it to 500,000 square feet, 1 million square feet type facility? It would cost a lot of money to do that. But if they think the benefit on the back end would be 30, 40, 50xing the revenues, then yeah, it can be worth it. It is at a higher valuation, so they do have an execution risk with their management. Although their management has done a really good job thus far, so I don't have a whole lot of reasons to doubt them. I don't, they haven't given me, like Hood with Vlad, hasn't really given me a reason to doubt them. So I'm not going to until I see some kind of cracks that make me think otherwise. The AI market could cool down, but right now it's not showing that. Economic recession could slow IT spending, but again, you listen to Jay Powell today, the economy seems to just be doing okay. Job market seems to be doing fine. Inflation has moderated. There's nothing, at this time to be overly concerned about. But the catalysts are just really strong right now. I already talked about the Georgetown facility that they've scaled up and are at full capacity as of last month. The potential for margin expansion is there as they scale. That's always a bonus. Customer wins beyond Dell. If those were to occur, it would just be a cherry on top. The Wall Street type discovery story. Nobody's discovered this stock somehow. I really don't understand. The timing, it just feels right. We're in early enterprise AI right now in the adoption cycle, which is really booming. They have the capacity, they have the right partnership to capitalize. And the stock, despite its run up, it still trades at a fraction of its market opportunity. So really, my investment thesis here it's the theme of this series. It's a rare convergence of like a massive market opportunity with a proven execution and capability. And they're this, like hood with the wealth transfer and with potential of being the future of blockchain and doing all these really cool new things that have never been done before by a financial, tech institution. I think TSSI is right place, right time, in the right sector with good management and a huge opportunity. And they're at this bottleneck where infrastructure is going to have to keep up with demand. And as long as that demand is there and it's growing, and if you think AI is going anywhere or isn't going anywhere, um, then this is kind of the stock you want to be in. So the perfect storm, it's happening right now. AI infrastructure demand, enterprise adoption is accelerating. Um, Specialized players like TSSI are the ones that can help alleviate these bottlenecks, and they have the capacity to do it. Right now, it's trading at 24 bucks. I think it could easily 4x from here, honestly. Over the next 2 years, I could see this trading at 100 bucks a share in 2027. I still fully expect it to be at least $30 by the end of this year. And that's just kind of where I am right now. Right, I have shares. I'm looking to deploy more into it. I have 1,000 shares. I would like to maybe triple that to get to 3,000 shares. I haven't decided. It would just be so heavily weighted in my portfolio for my long term at that point. I don't know why, don't know why. I do know why I want to do it. I don't know if I want to do it and be that weighted. Robinhood's already a very heavy position for me. Yeah, I've flirted with the idea as far as equities go, just selling everything else and putting it into these two for just at least the next couple of years. Um, yeah, I would obviously have to monitor that closely to avoid any kind of severe market downturn. I would probably set stops at a level that I would get uncomfortable at. I wouldn't just let it roll. And yeah, if you found this valuable, please, like and subscribe. You can find me Invest with Meh on X at Oshawa Hill. I also have a Substack Invest with Meh. If you want to look up my articles there, you can see where I've written about TSSI before, Hood, among other things, Ethereum, some of my other plays and theses, some that have worked out, some that haven't. I like to think, I want to be right about 70% of the time. And then when I am right, like I am on these plays, I really want to hold to make the juice worth the squeeze. Just remember, this is not financial advice. Always do your own research. Definitely don't risk more than you can afford to lose. And I'll see you in the next video. Thanks, everyone. Bye.